Hello YouTube. In my last video I showed you how to master the opening range strategy, and today we're building on that. We're diving into how I use the opening range to master the Frankfurt, the London, even the New York breakout. This is an incredibly powerful way to capitalize on the most volatile time of the day where the market can give you some of the biggest moves. If you haven't watched the first video yet, make sure you check it out for the foundations you'll need to move forward. The link is in the description below. But for now, let me show you step by step how this breakout strategy works and how you can start using it to boost your profits. Okay, let's get started. Just go over the quick basics before we jump into the charts. Okay, so what I have marked up on my chart day in, day out before I get ready is I use the high time frame is the hourly chart. I'm marking up the highs and the lows and the pivots. I also do use the session highs and lows as well, but that's all that I use. Okay, and then obviously if you've watched the previous video, we are marking up the first 5-minute candle of the session open, either Frankfurt, London, New York, depending on what pair you're trading. Two main trades that we're trading with this strategy. Okay, we have first is a type of setup is a wick sweep / fake out and breakout. So we have the first 5-minute candle of Frankfurt open. We draw the opening range from the high and the low. This example, it's a bearish example. Price moves above the range but closes back inside the range, leaving just a wick sweep up the top. And then we get a next move out and a strong close below the range, activating our signal to trade. We can enter at the close of this candle, stop loss above that candle, and then you're targeting your 2R. Okay, this is nothing new if you watched the first video. The second one is the breakout and retest. So we have also a bearish example here. We have price moving down impulsively. That's what we need. We have price that has left imbalance behind, which is a requirement. And then we have price moving back in to mitigate this imbalance as well as retest the opening range, ideally with a wick, but it's not the end of the world if we do close back inside, but these are your strongest setups. And then we're getting a new bearish candle to close below the last bullish candle with a body, and then we have our outside of the opening range, and then we have our entry signal, and we go short there as well. Okay, so that's all I'm going to go over at the basics, and now we're going to jump into the charts. If you're any confused at all, make sure you watch my original opening range video. That'll be linked in the description below, and then come back to this video. So let's jump into the live charts and show you exactly how I do it. Okay, let's jump in the charts. I'll give you a nice live example that I took on GU here, on GBPUSD, for everyone that doesn't know. Okay, we're going to start with step one. Okay, we're on the hourly. We're looking at, our time frame momentum and the possible areas of liquidity that are nearby. Okay, so first of all, what can we kind of obviously see? We were moving up impulsively, bullishly, and we've now shifted now to impulsive down, little consolidation, impulsive down, little consolidation, impulsive down again. I say impulsive, even though it is getting weaker the move, but we still have imbalance here. So we tested the imbalance and produced more imbalance. So we're respecting the hourly bearish imbalance at the moment. Okay, as you can see from the other side, when we're on the way up, tested the hourly imbalance, moved up, created more, tested, created more, tested, created more, exactly. And then, we tested, pushed up, and then we started to create bearish imbalance that we started respecting. So just following the balance, you can never go wrong. So right now, obviously this was Frankfurt open. On GBPUSD, I'm really just focused after the London open for obvious reasons that the London controls this market generally. And so what we want to go do next is mark up very near hourly highs and lows, potentially ones that have already been taken out, but also mainly we want to focus on ones that can be targets or magnets for price to move. Okay, so we're expecting push down, we've had a push up, respecting this imbalance, and the next push down. So we've taken out this local low, fair enough. It's not really that much interesting to us anymore. What do we still have? We have this low here. Okay, let's have a look for little pivot points, areas where we took out lows, and we have little pivot areas we can draw across just to get us a good idea of, another pivot down here, pull back, took out some lows and then pushed up. These aren't major highs or lows, but they're definitely areas of, liquidity or, just target areas, magnet for price, whatever you want to call it. Doesn't really matter. It's just about the concept that these will attract price and price will move through these areas rather quickly. Okay, obviously we've got, bullish ones that have been formed up here. But we're not really expecting price we've got a new one here just this morning. Not really expecting price to go up. It can. We're very open to anything, but our momentum's down. We're respecting this imbalance. And the big thing is, do we have reason for price to keep going down? Which we do. You don't have to mark out all this stuff down here. The local ones would be enough. We're just trying to get in and out of the quick in the market. And that's all I'm looking for. Maybe it's nice for you to put on your high time frame. You can be like, okay, how H1's down. You can write it down or whatever you want to do. And then you jump onto the 5-minute, so let's say the 5-minute at this point, before we had the Frankfurt open, which I think was, somewhere here, the 5-minute was locally moving up. Okay, so then we've got like a discrepancy between the 5 minutes idea and the hourly idea. So generally what we want to do is wait for the 5 minute to agree with the hourly, and obviously agree with, our opening ranges, and then we can, take a high probability trade. Okay, so what do we got here? We are at 255. So the next candle will be the first 5 minute candle of the London Open, the London session. So we will just play that out. There we go. Really nice bearish candle. Do is we can draw our box or our parallel channel, whatever you like to do, our London opening range here. And what we're looking for is a nice breakout, or we can get a fake out and then the breakout. We're looking for a bearish signal here, realistically. Obviously, we could get bullish signals, but they would be lower probability because not only are we going against 5 minute momentum here, we're going against hourly momentum. Right now, best case scenario, breakout, retest, or fake out, breakout, or fake out, breakout, retest. Something like that we can just continue shorts down. This is really nice that we've mitigated some imbalance here as well already. It's a really nice confluence. The best trades have always mitigated M5 imbalance. Just a little tip for you guys. So let's have a look. We've now got a really strong breakout here. We've already got imbalance formed right here. Okay, so what we're looking for as per one of our setups is if we don't produce any more imbalance, we're looking to come mitigate that imbalance and get this breakout and trade us down. So it's a really big breakout. We've taken out some of our liquidity, which isn't ideal, but we know there's more down there. So price can come a long way. We're moving down very impulsively. So let's just see what happens next. This is a really good thing to happen here. We've got extra imbalance. Ideally, we don't even have to mitigate a complete one. We could essentially just get a quick tap, mitigate 50% or mitigate fully. What we don't really want is when we only mitigate maybe like 3/4 of it. Usually what happens is we'll go down or mitigate the rest. But if we are really just a tap in and go, or a 50% exactly and go, or obviously the mitigate full and go, then that's going to be a really nice signal here. We don't have to mitigate both imbalances. That's not necessarily just, one of them here. So we've got our breakout plus imbalance, which is our first step out of our opening range, okay, which is the first 5 minutes. Now we want to come back and test or mitigate some of this M5 imbalance and then give us a nice entry signal. Okay, we've come back in and we've mitigated both of the imbalances. Happy days. Even better, we've got nothing to come back. So it should be a really nice move if we do get an entry down here. Okay, as well, we haven't created imbalance on the move up. So we don't actually have to flip any imbalance or on the way up, which I will show you an example of that. What we're just looking at now is simply closing below this line, ideally within 2 candles. So we've now closed back out. If we had already engulfed this last bullish candle, this last previous opposite candle, then we would have an entry signal here. Come in and we've mitigated imbalance. We've got our defined low that we need to flip. We don't have any imbalance in the push-up leg that we need to close below. And so we can wait to see if we get a signal here. That's a really big candle, big strong signal, but we do get a close below. There's a couple ways we can trade this. Obviously, you can go straight away. How generally I trade it, if I'll have a look, I'll cover, the main candle that had retested the London opening range. We've got like a lot of room to move, but another way you can do this is if you want to get a little bit of tighter stop, often these will come back, either create imbalance and then you'll get a retest of the imbalance where you can get a better entry, or, maybe we'll come back and retest this as a breaker block, essentially like that. But essentially, if the stop loss isn't too big, I'll enter like that. Probably in this case, I would wait to see if we got imbalance and I would enter out of that, which I did live. So I waited, I saw price. It's essentially bearishly retesting, this loss of this low here. Obviously not quite, but very close. We created imbalance. So what I'm expecting is hopefully price comes back up, which I know it did, bearishly retest this, tags me in, and then we go, because these are levels that we've marked out are really good flip support resistance zones also if they line up with your idea. And so I was quite confident that we get a bearish retest, maybe not as deep. So I wanted to just enter on the edge, and then it meant that my target was much more realistic on this next liquidity line. I still kept my stop loss above the high here, just in case. We could always, sometimes it could come all the way back up to fill out this imbalance and retest and go again. So you want to have the high covering any non-mitigated candles. If they haven't been filled 50%, then this is there's high chance they could come back. And there we go. We would be entered into the trade. Price has come back, retested the imbalance, retested the low here, and then we've got our rejection there. Okay, so now we're moving forward. Does that mean we can't come back and tap in? But generally what I'm doing is around 1R, I'm moving to break even, because generally I'm not looking to, ride this all the way back up. And if we do push all the way back up, generally I can just get in again without, if it's moving my way, generally these are quite impulsive moves and happen very quick. And you don't really want to, it go back on itself against you. Okay, it's moving quite nicely. Okay, we've come back up. Okay, normally they're quicker than this. Now we finally got the TP there. Oh, and it's collapsed pretty much all the way through, down to these liquidity lines down here, over 4.8. I'm happy to take 2R. That's my day done. But yeah, it's a perfect example. Really nice. We're coming off, hourly's coming down. The 5-minute agrees it's coming down with imbalance. We mitigate some imbalance. We get another really strong breakout candle with imbalance. The key is the imbalance, the momentum. Okay, so let's mark out what else we had here. We then had a break of this low. It was quite a big stop loss, so then we waited for imbalance to form, which is also another sign of strength for our entry. And we entered out of the imbalance, and we made sure our 2R made sense with the next liquidity line. Okay, now let's jump to Euro, another example of a trade that I took. Look, what are we currently doing on the hourly? It's really key. Just follow the imbalance. That's why this imbalance indicator is so good. Okay, hourly imbalance here, and respected. We created more imbalance here. Okay, so currently our hourly momentum is up. We're looking to respect this move up, hopefully the imbalance, and create another move up. Is there a reason for it to go up? So let's start looking at the pivot highs to mark out our liquidity areas that will draw price to that area. If we look to the left, we got this pivot high here or high, it can be internal, external. It's just literally, it's obvious pivots in the market. We've even got an equal high here. It's so good. More highs here. This is all just clustered hourly highs. Even locally, we put in, like flat ends, like flat highs here, potentially 1, 2, 3 even there as well. So it's sort of screaming for us to, go high. Okay, we've got that covered. Obviously we can mark out the lower ones, but they're not really, in our mind, we're expecting price to go up, obviously with something so obvious like that. So I want the 5-minute to agree with us as well. So we're on EURUSD. This is, we're going to be trading the Frankfurt Open. Okay, so that is 2 a.m. New York time. All right, so let's jump onto the 5-minute. Okay, so we are at 155 here. So the next candle will be the first 5 minutes of the Frankfurt opening range. We've moved down. So we want to mark out with our parallel channel the high and low of the first 5-minute candle of Frankfurt Open. Is we want our 5-minute to switch to agreement with the hourly and as well give us our setup. We've got a sweep of the low here. Okay, we have some imbalance here. So essentially we want to flip that imbalance as well and close above the high for the standard trade here. And look, we've respected the imbalance. Okay, so M5 is still moving down. The manipulation isn't done yet. Okay, so we've then had another wick sweep here. And we have had another manipulation of the M5 low and a close above here. We're going to see if we get a nice clean close above this imbalance here. Okay, so we've moved a long way. So unfortunately, it's kind of out of the option of doing something like this. It just doesn't make sense. If we're targeting this, 0.77, we're kind of unfortunately past the point of taking this trade. You could be risky, bring your stop loss in, but you only run the risk if we do pull back and take yourself out. So what I would do now at this point, let's see if we get the retest. Okay, so we'll have a really nice manipulation. There is an entry here that I will share probably at a later date, but not right now. But this manipulation here, the breakout, so we're looking for a retest now. Hopefully we get the retest before we take out all our liquidity. Okay, and we've taken out that main liquidity there. We still have all this stacked highs here. So even if we were to come back, retest, I would probably be looking to take out some highs here, or, obviously I don't need that much, just need my 2R. This is an extended one. Not all are going to be as clean, as easy as the first example. We've now got M5 imbalance here. We've got some M5 imbalance up here. It's not as relevant, but this stuff that's right near our Frankfurt opening range, we're kind of looking for price to come down like we talked about, test, ideally mitigate, and then give us a nice entry candle that we can get into and, get 2R, potentially push it further. We'll have to see what the market gives us. It's still valid. We've got a really strong move up. Let's see a mitigation and a retest and see if we can get a trade. We've now mitigated the imbalance. The thing is, we have imbalance all the way up here. Okay, so we're not expecting price to flip all the way up here until we can take our trade. That wouldn't make sense. Really, the imbalance I'm worried about is when it's really close to my entry candle. That's when I want it to flip. Obviously, I'm going to look to try have my 2R potentially targeting in this area because I know price could reject this area and send us back down. Unmitigated imbalance is always not that ideal to have, in your way. It's kind of like a wall. But at this moment, we are looking to flip this candle to get ourselves a trade. Okay, we've now pushed down again. So we're looking to flip this candle. We are closing back inside the opening range, but that's not a big deal. From my back testing, it isn't a big deal at all. It's just if we close out the other side of the range, then it would reset the breakout. And we would have to look for a new breakout. So this is the high we're looking to close above within at least 2 candles. And there's our second bullish candle has closed below the last opposite bearish candle. That's giving us our signal here. So you can see that this candle is pretty much mitigated 50%. Yep, we tapped into 50%. So we can have our stop loss below this entry candle here. So there's one way to do it. You can enter right on the close of it, and we can target 2R here. Or like I said in the last one, often it will come and retest, this as like a breaker block, or you can wait till imbalance forms. Okay, we printed the next candle, putting in imbalance here. So I'm going to move my entry to the edge of this imbalance now, just because often we can get taps into the imbalance and go, like you saw on the last trade with GU, and we would be tagged in. Okay, that's a really nice reaction. Let's come back, and there we go. We've got our TP there. Edge of the imbalance is usually a really nice place to be, especially when you're trading breakouts. Okay, so we've pushed up. We've taken our 2R, we can be done for the day. I'm going to show you, I'll probably play this all the way through because I know we came back in. So if what we're happening here, it's a really good example. If what's happening here, we come back in and we're coming back down. If we're going to trade another breakout, another retest, generally I would like to see this low get taken before I start trading. Because what this means is we've had this push up. It's been rejected and pushed back down, which means this is kind of like a weak low. So generally, I'd like to see price come, take that, and give us another signal to then trade up. If we then respect this low, the problem is that we've now put in equal lows, which is very high, like very likely that these ended. This isn't holding anymore, and we're moving back through. And there's potential we could flip it and we can trade down like that. We did take out the low here, which is perfect. Then we can start looking for another entries. Unfortunately, we have such a massive candle here that we kind of have to flip, and we've got news coming up, but let's see if the theory plays out. Okay, obviously this is occurring in a lot of candles, so this won't, especially to begin with, you would be very cautious of the strength of this, but to look at the theory, look at the respect of the opening range, all we've got is stacked liquidity here. I can expect that this, if we do break this high, we could move pretty quick. Okay, so there we've broken the high. If we were going to take a trade, it would be something like this. And we cover this low because if we would pull our fib on this candle, we haven't mitigated 50%. All the other things have been mitigated 50%. But, we have news coming up, core inflation rate. We're not ones to gamble on the news, but it's just for this example. As expected, it's a massive move out there, taking all the liquidity. The main thing is, the main focus is the theory of respecting this opening range. We had a really nice manipulation. We had a really nice close out here. We closed out with imbalance, with body breaks. Then what we had was we had this flip. We got into the trade there, targeted our 2R. Price came down for another run. We flipped again, another 2R. Easy as that. Okay, let's look at one more example here. This looks like a lot of chop, which, I would agree it is. But we're day traders. We want to know what price is doing today. What we want to know is what is the current momentum, and how we can find that is imbalances. Okay, what imbalances are being respected? On the hourly, I use the hourly. And pull it across. Okay, so we had this last really significant move down. You can see here, we've pushed up and we've respected this imbalance. And what have we created? Some more imbalance down. Okay, so this seems like a reasonably strong high at this point. We have tiny imbalances here on the way up, but if we look at it, big imbalance, big imbalance. Okay, so we're thinking that maybe this is where we're going to go. Let's have a look at liquidity. There, pivot low. We do have this one all the way up here. But what did that do? It took out all of these highs here. Okay, so it's already cleaned up a lot of the mess. Then as well, this one in here took out that. And then what took out that as well? That. So we've got 1, maybe 2 highs versus 1, 2, 3, 4 lows. And we're coming off a big move down with imbalance on our side. We're on EURUSD here. So we're really interested on the Frankfurt opening range, which is the first 5-minute candle of Frankfurt. So let's go. Let's draw it out, the high and the low. Okay, we're tapping into this high up here, which looks really good on the 5-minute as well. Okay, we get a sweep of the low. Okay, so it's not ideal. It's not really what we're looking for, but let's see if we get some sort of fake out. Okay, we get a slight sweep of the high. So we have got a couple manipulations here. This is why the opening range is really nice. It's going to keep you from getting chopped out because you have a frame of reference. So we had a wick sweep of low. Now we've got a wick sweep of the high. We're looking to go short because that will align with our hourly. So we need a close all the way down here. Let's see. Okay, we get another manipulation. So how I work this, actually a really good example, is we just keep moving it down. Okay, so if we get a wick sweep and a wick sweep, we've got to close below this next one there to ensure that it's not a wick a wick sweep reversal. Okay, so we keep moving down with the wick breaks, and that looks like we get the break there. Okay, so what we can do is we will want to get in on this trade here. We can just cover the high of this candle here. It's really nice. It's still, interacting with the Frankfurt opening range. It's still part of our sweep and then close outside. It's obviously a little bit more tricky, but that's why it's a really good example. Cover the high of the wick, but as per I said before, you can look at the candle's 50% line and see if it's already been mitigated. So likely if it's been mitigated, then if price is to come back to it, it's just going to break through. There's no point having that extended stop loss. So this candle has mitigated the previous one, so you can just go on top of this candle. If you'd like, usually we do, tap there, wait for imbalance and enter. I'm on the wick sweep ones, very, very inclined to get in as quick as possible. This is aligned with our idea higher time frame. We're tapping into this, area that took liquidity. We've had our manipulations. Even to add on top, we flipped this candle with the imbalance, which gives us that much more confluence there that where, it's a strong entry. We've also, as we pushed up, we've mitigated imbalance over here, which is really nice as well. It's not just pushing up into no man's land. And so we've got a nice area for ourselves there. Okay, yeah, we would definitely be in 100%. And we're moving down, and there we go. TP done. Okay, what we've got down here below, as you know, we don't know how far this could go. We've got this hourly, we've got the Asia low here, we've got everything down here. Be interesting to see what it takes out. Okay, we've taken out that hourly low, and you can see we start to get a reaction. Okay, we're moving quite low. So this is at 4 or 5R here. So we literally just caught the high of the market today. Okay, everyone, thank you for getting to this point in the video. I really hope you enjoyed this one. We've now learned how I use the high time frame, the hourly, to get my bias, how I combine that with the M5 momentum as well to connect them two together, and then how we use the reference of the opening range to get into amazing trades. If you really enjoyed this content and want to see more, make sure you like, subscribe, comment down below with any questions you have. Very exciting news, my mentoring Discord is launching the first week of February. Check the description below for the link to the waiting list. It's almost full now. There's a few spots left, so make sure you sign up. Jump into my free Telegram group where I'm posting almost every day of the week as well, sharing my thoughts and my trade ideas. Thank you so much for watching to the end of this, and I will see you guys in the group or in the next video. Thank you.